Assalamualaikum warahmatullahi wabarakatuh. My name is Sukma Wardhani from Faculty of Business Economics. I will read a text entitled Taxation in Indonesia. Taxation in Indonesia. Corporate income tax. Under Indonesian tax law, a company is treated as a resident of Indonesia for tax purposes by virtue of having its establishment or domicile or place of management in Indonesia. A foreign company carrying out business activities through a permanent establishment or PA in Indonesia will generally have to assume the same tax obligation as a resident taxpayer. Indonesian PAs of foreign companies have to settle their tax liabilities either by direct payments, third-party withholdings, or a combination of both. Foreign companies without a PA in Indonesia have to settle their tax liabilities for their Indonesian source income through withholding of the tax by the Indonesian party paying in income. Income tax is collected on certain types of transactions such as importation of goods, sale of goods to the government, sale of purchase of certain product, sale or purchase of very luxurious goods. Payment is certain service. Tax rate and period. A general flat rate on 25% applies as corporate income tax. January to December is the normal tax period. However, a different tax period may be used with prior approval from the Director General of Tax, or DGT. This tax rate also applies for PA profits, after-tax profits, or regardless if remanded to the home country, are subject to 20% withholding tax WTH rate. Australian business meeting certain criteria may have access to a reduced WTH rate of 15% through the Indonesian-Australia Tax Treaty, Value-Added Tax or VAT, and Luxury Goods Sales Tax or LST. Value-Added Tax or VAT is generally applicable at a rate of 10% on the deliveries of goods and services within the Indonesian custom area. This may be increases or decreases to 15% or 15% according to government regulation. Other categories of goods and services are created as follows. Goods exported from Indonesia are subject to zero rate VAT, but imported goods are subject to the full 10% rate with some exceptions. Some exported service qualify for zero rate VAT, including toll manufacturing, repair, and maintenance and construction services. In both, use or consumptive of foreign service or intangible goods, with few exceptions, is also subject to VAT at 10%. Some goods are also subject to LST upon import or delivery by the manufacturer in addition to VAT. The current LST rate ranges from 10 to 55%, although the law allows the rate to be increased up to 200%. incentive. Indonesia offers various tax concession schemes and incentives for business including tax holidays. In both investment incentive, reinvestment or branch profits, tax cut for public companies and tax neutral mergers. An example of one is the 15% discount on the corporate tax rate for small business with an annual turnover less than IDR 50 billion or approximately $5 million. Certain requirements need to be fulfilled by business to be considered eligible for such incentives. Please consult your tax advisor for further information. Tax administration. Tax liabilities for a particular period of or year must be paid to the state treasurer through a designated tax payment bank or bank persepsi, and then accounted for at the Indonesian tax office through the filing of the relevant tax returns. The tax payment and tax return filing for a particular tax must be undertaken monthly or annually, or both, or depending upon the tax obligation in question, and can also be conducted electronically. Corporate tax return must be filed by the end of the fourth month after the end of the financial year, with tax payment having to be completed prior to filing. The deadline for filing corporate tax may be extended by up to two months through written notification and a tentative tax calculation submitted prior to the deadline to the DGT. Corporate tax can also be arranged to be paid in a prepayment system based on the previous tax year's liability. This involves monthly installments of payment to be made by the 10th or 15th or each month and tax return filed by the 20th of the following month. VAT in comparison is a monthly penalties between 2 to 48%, while the late filing of tax return ensures an administrative penalty of IDR 1 million or $100. In addition, dividends received by resident individual taxpayers are subject to a maximum tax percent final income tax. Non-resident individuals are subject to VAT at 20% on their Indonesia searched income. Concessions are available. Consult your tax advisor. Terima kasih. Assalamualaikum warahmatullahi wabarakatuh.